Welcome to House Money, the podcast that cuts through the noise for buyers, sellers, and agents along the Wasatch Front and beyond. Together we dive into unfiltered, no-nonsense insights to help you win in today's market, whether you're buying your first home, selling smart, or stepping up as an agent. No fluff, just real strategies that work. This is House Money. Welcome back, my friends, to another episode of House Money. I am your host, Rychen Jones. I am an associate broker and realtor here in the greater Salt Lake City area. I just had some things come across my phone from a lender and an agent that I am in very close contact with, talk just about every day. And there's some activity going on in the Salt Lake City area that is a little bit concerning. And if you are a homeowner, you need to be listening up. If you are in a situation where you are trying to figure out how to navigate your consumer debt, your car loans, your credit card loans, your student loans, maybe some medical debt, whatever the situation may be, please listen to me carefully here, because what I'm about to say you may not want to hear, but you may actually need to hear it. If you are holding on to your 3% mortgage rate, or 2.75 or 2.87, whatever it is, that 3.5, 4, 4.5, whatever your interest rate may be, if you are holding on to that interest rate and not letting it go for any reason under the sun, and are still struggling financially because of your other consumer debt, I need you to hear me clearly. You cannot let your 3% mortgage rate become a sacred cow in your financial life. It will kill you financially. The text I just got from one of my lenders that I work with, they're working on 3 short sale files right now, meaning sellers are having to sell their home. They're trying to get out of all this debt that they may have accumulated, maybe for no fault of their own, but they're trying to get rid of this debt, and that includes them selling their home, and they're underwater on their home because maybe they bought in the last year or 2 years or whatever it may be, and they just don't have the equity to be able to sell it. So it's turning into a short sale. She also said that the notice of defaults have hit a 5-year high in Salt Lake County. Also, that they are navigating more bankruptcies than she has seen in the last 10 years. She's been at this a lot longer than 10 years, but in the last 10 years, she has not seen more bankruptcies that she's working through right now. Here's the deal. If you've got any equity in your home whatsoever, and you're trying to pay down your car loan at, let's say, 8%, 10%, 12%, whatever it may be, and you've got some medical debt on there, or you've got your student loans, depending on what type of Pell Grants you have, or whatever rates those may be out, and then you got your credit cards at 20%, maybe on the low end if you're lucky, more likely 25%, 30%. I saw one of my credit cards that I pay off every month. I saw that they raised that rate to 35.99% 2 months ago. Thankfully, I do not carry a balance on that card. But if you're trying to pay off all this debt at 10, 20, 30% interest, and you're holding on to your 3% mortgage rate, we need to do some math here, my friends, because if you're drowning in that debt, it's going to be very difficult for you to pay off that 30% interest debt. But if you've got the equity in your house, I know the idea of giving up your 3% mortgage makes you sick. I know it makes your stomach turn. But is losing the house or having to sell in a short sale, or worse, a foreclosure because you can't make any of the payments, is that any better than doing a cash out refinance, paying off your high interest debt, and yes, your mortgage rate may now be 6.5% or 7% or 6.25%, whatever it may be when it works out. Is that worse than holding on to your 3% mortgage rate while also drowning in this other debt? My friends, you've got options. There are options there. You may not like them all. They may not be particularly pleasant, but please start asking the questions. This is where I feel like most homeowners get into trouble, is they're either afraid to ask questions, or maybe they're embarrassed to ask questions. They're embarrassed to have someone open up their financial closet and see what's there. It's okay. It's okay. You're not alone. You're not the only one struggling through this. The people who successfully navigate this are the people who ask questions. Ask your lender. If you don't know a lender, call me or call your real estate agent. They know a lender. Trust me. We talk to lenders every day we can put you in touch with to look at your financial picture and see if it makes sense to do a cash out refinance to pay off the high consumer debt. Bring me in as the agent, or bring your own agent into the picture. If you need to know what your house is worth, maybe you need an appraisal. Maybe you don't need to pay for an appraisal. You just need to have a general idea of what it's worth so you can start working through some numbers with your lender. Please call us. We are happy, and it is not a problem for us to help you get a value of your house, or a value range of your house rather, so you can have an idea of what your options may be. The absolute worst thing you can do is put your head in the sand and hope that it just goes away. it's not going away. That 30% interest credit card is not just going to disappear. It's going to keep accruing day after day. And then you're going to try to make the payment again and again and again. And whatever payment you are making, so little is going to principal, it doesn't even feel like you're making a dent. Your home, while not a piggy bank, it can definitely be an asset to help you navigate through difficult financial times. And I understand that these are difficult financial times. We've had inflation in the last few years. Debt's gone up. Consumer debt's gone up across the board. It's been a difficult financial road for a lot of people. I get it. I'm empathetic to it. I understand it. But you've got to ask some questions. Call your lender. Say, hey, here's what I've got going on. I've got this debt. I don't know what to do with it. I don't know how am I going to pay it off. I'm struggling to make my payments every single month on my house and my car and my credit cards and put food on the table. Is there an option to do a refinance to potentially get me out of the situation? What that's also going to do on a refinance, just like when you buy your house, you're not going to have a house payment in the month that you do your refinance. You're also not going to have a payment in the month following the month you do your refinance. So potentially you might be able to save yourself 2 months of house payments, which you could then put towards some of this other debt. You, again, do the math, put it all up on the whiteboard, look at all the variables, see what it looks like. But you have outs here. Many lenders, many banks will loan you up to 95% of your loan of your home value. So if you have any amount of equity, if you put down a down payment of 3.5% or 5% or whatever it is, and you've had any amount of appreciation in the time that you've owned the home, you may be in a really good spot there where potentially you could wrap in your refinance costs into your new loan, so you're not necessarily paying for those costs out of pocket as well. Again, I'm not a lender, but I talk to lenders all the time. I do math. I work through these issues with people every day. And right now we're seeing that more and more. People are struggling. If you get nothing else from this 8 minutes or so, just know this. Do not let your 3% interest rate be a sacred cow that ultimately kills your financial future. We don't want to get in a situation where we have to short sell the house or have it go to foreclosure because we couldn't make the payments because we spent all that time holding on to our 3% rate while trying to pay off our 30% interest rate credit cards. Let's look at our whole financial picture, see what our options are, make the best decision going forward for you and your family. That's what I got for you today. This is House Money, and I appreciate you being here. We will talk to you next time.